Yo, what's up, Ultimate Hustlers, and welcome to the Cortez Hustle Show, the business podcast for the entrepreneur of the 21st century. And I'm your host, Cortez Hustle. Our goal is to give you a behind-the-scenes look at how the world's greatest hustlers build amazing brands, scale their businesses to incredible heights, sell more, make more, and create mass movements that impact the world. It doesn't matter if you're a seasoned vet or you're sitting on the sidelines with aspirations to one day unleash your inner hustle. This show will provide the insights into how pure grit, determination, and hard work has morphed into some of the most iconic brands and personalities and how they are moving the culture forward. You'll get a mix of solo shows featuring yours truly, as well as interviews and content from other hustlers that I either know personally or I've learned from or whose grind I've come to know and respect. And you'll also get exclusive recordings from our membership called Monetize My Life Academy, which you can check out at monetizemylifeacademy.com. That's a program where we go live every month with some of the best hustlers on the planet, sharing best practices on how we all can explode our brands with advanced branding and marketing tactics, business development strategies, and financial game planning necessary to build the empires we all desire. Again, that's at monetizemylifeacademy.com. If you like today's episode, chances are the hustlers you're connected to will like it as well. Share it with those in your network. And when you do, use hashtag Cortez Hustle so I can see you and hopefully give you a shout out and share you in my stories. So check out today's episode and make sure you subscribe to the feed on your favorite podcasting networks. All right, my bad. Welcome everybody to the Cortez Hustle Show. I am, of course, your host, Cortez Hustle, the one and only financial health mentor from My Perfect Money Plan Studios here in St. Louis, Missouri. And My Perfect Money Plan is home of the Generational Wealth Masterclass, where you will literally learn how to get double-digit returns on your money, ladies and gentlemen. And that means that your money doubles every 4 to 5 years. If you look at some of the things that you will learn on the Generational Wealth Masterclass. So go to myperfectmoneyplan.com and check that out for yourself. Welcome to the show this morning. Super excited. We're talking financial terms that everybody needs to know. One of the things that keep most people out of the generational wealth race is not understanding that money has its own language. A couple quick announcements before we get into that. For those of you who need another stream of income, I don't know if you guys are paying attention to what's going on in the news, but this Delta strain might mean another global shutdown. Ladies and gentlemen, are you prepared for that financially? Do you have other income streams outside of your job if your job has to furlough you for a month or two? I want to help you build a business in the financial education space for 2 reasons. Number one, you need an income that you own and control. Number two, we need more financial educators explaining to hardworking people how they can build generational wealth. And that's what our program does. We are the only program that provides the financial education and the expert execution, and that equals financial transformation. So all you got to do is text me your name to 314-874-6887. Again, text your name to 314-874-6887. I'll put that in the show notes as well. And I'll respond with some information about our program and how you can start your own business in the financial education space. So we're talking money terms that you need to know. Here are some of the money terms that we're going to go over. We're going to go over mutual fund terms. We're going to go over retirement and education terms. We're going to go over stock market terms. bond terms, and some real estate terms, time permitting. And don't worry if you can't get these terms live on air. Check the show notes. I'll put in the comments the link to where you can actually go download this resource for yourself. Y'all know how we do, though. It is we start the show with a quote of the day. And today's quote is from the legend Jim Rohn. Success is something that you attract by becoming an attractive person. Listen to what it's saying. Success is something that you attract by becoming an attractive person, right? Some of you guys instantly went to vanity. Well, I got to become somebody that looks good in order for me to attract success. No, you got to become a success so that you can attract success into your life, ladies and gentlemen. You got to become an attractive person. You got to become a magnet for the things that you want to show up in your life. How do you do that? You become those things. You want to attract more positivity into your life. You have to become a positive person. You want to attract entrepreneurs into your life. You got to become an entrepreneur. You want to attract a soulmate. You want to attract a life partner. You have to become a life partner, a soulmate. Jim Rohn is also famous for saying, work harder on yourself than you do on your job or anything else. What are you becoming today? Because what you are is what you are currently attracting in your life. So if you want to be successful or you want to attract success, you have to become a successful person. You might be saying, well, Cortez, I'm not successful in my business yet. How do I attract successful? Well, become successful in other areas of your life. Learn how to become successful in your discipline every day, getting up at the same time that you set for yourself every day. Learn how to become a success on your job. This is something that's huge that so many people, because of people like me, I'll admit, we make you think entrepreneurship is so sexy that you start bashing your own job, talking about how you hate your job. No, if you want to become a good entrepreneur, it starts with becoming a good employee. Because when you become a good employee and start looking at your position, your company through your business owner's eyes, through an entrepreneur eyes, you start seeing things differently, and you'll know that you'll need to implement these things in your life. You want to attract success. You got to become success. You got to think success. You got to study success. And that's how you start to attract that into your life. You got to go and get around successful people, even if, let me say this to y'all, because while I'm on Jim Rohn, let me give you another one of his quotes. He said, sometimes you might have to pay a minor fee to get around some major people. Sometimes you might have to make a minor investment to get around some major people. Look at all the people in your life that you can just go get their time and it doesn't cost you anything. Do you want the life that they have? Or when you look at the people who got the life that you have, and it might require that you buy a ticket to a conference. It might require that you buy one of their books. It might require that you invest in one of their master classes or their webinars. Sometimes it requires a minor fee to get in the presence of major people. You got to be around success. You got to study success. You got to breathe success. You got to start counting the successes in your life, the little wins, and you'll start attracting success in your life. Success is something you attract by becoming an attractive person. That is, my friends, 1 minute motivation right here on the Cortez Hustle Show, brought to you by my girl, Bianca Shante, author of All Things Positive. Let's cut to our sponsor. Today's show was brought to you in part by Bianca Shante, wife Air Force veteran, business owner, motivational speaker, and now #1 best-selling author of All Things Positive. This book is filled with hope and inspiration for anyone that needs a little push. If you are struggling in a relationship, with your mental health, with deciding on a business idea, or just want a new awesome book to read for your self-care day, this is the one. This book will help you to self-evaluate and even ignite a fire within. Grab yours today at IamBiancaShante.com. All Things Positive has 7 focus areas where different life struggles, weaknesses, and negative perspectives are addressed while giving readers a more positive outlook, direction, and a push to change their life trajectory for the better by focusing on all things positive. IamBiancaShante.com. Grab your copy today. All right, ladies and gentlemen, please, please, please support our sponsors. This is what allows me to get up and do this show for you guys every morning and bring you guys these values for free because other people are investing in the show. So please support our sponsors. Today, we're talking money terms that you need to know, guys. Money has its own language. You either learn to speak that language or else. One of the reasons that there's 2 main reasons that people do not invest. #1, they are scared to death. #2, they think they don't have the money. Well, why are people scared? What is the #1 way to overcome any fear? I don't care what it is. There's one way, there's a #1 way to overcome any fear that you have, and that is through knowledge, right? The reason people are scared is because the financial services industry has set it up that way. They create big, tall buildings for you to go into. Everybody is walking around with a suit and portraying some level of authority so that you assume that it's complicated to build wealth. So you assume that it's hard, that it is something that you should be afraid of. Well, anything that you have ever ventured into for the first time is frightening. And the only reason that it's frightening is because you don't know what to expect. But when you start learning that thing, when you start grasping the terminology, when you start understanding the concepts and the precepts, when you start immersing yourself into these conversations, the fear starts to dissipate. Same thing is true when it comes to building wealth. The same thing is true when it comes to money. But I teach my kids as they were growing up in school. I didn't understand this as a student, right? But there's a reason that when you study any subject in school, the first thing that they had you do is what? You got to do your vocabulary. Why? Because if I don't do the vocabulary at the beginning of the chapter and understand some of the key words and phrases in that chapter and what they mean, as I'm reading through the chapter, I'm going to get lost because I don't understand the terminology. The same is true in the world of money. So I'm going to give you some of these terms. I'm going to go rapid fire because there are a lot of them that we got to get through. I'm going to give you some perspective because that's the other thing that you got to get when it comes to investing and growing money. Terminology and perspective. So let me do this because a lot of you guys will want to grab this download, and all you got to do is go to www.workwithcortez.com/FLF, which stands for Financially Led Fathers. Now, ladies, when you go here, do not be disappointed because everything is pointed at the fathers. This is a resource that I give to my Financially Led Fathers community, but I think it's worthy that anybody who wants it can have access to it. But just know that everything is addressed to fathers when you go to that page. So let's go into, first, we're going to talk about mutual funds terms. Let's get to it, y'all, because y'all got to know this stuff. Financial terms can be intimidating. The financial industry can even seem to have its own language designed to keep the average person confused. Y'all hear what I'm saying? It is designed to keep you confused. That's why you have some of the same words that we use in our everyday language. When we transform into money language, they mean something totally different, right? But if you understand the terminology, you'll gain the confidence you need to make good, informed decisions. In this small report, you'll find some of the most common financial terms and acronyms used in the world of banking, mutual funds, stocks, and real estate transactions. So we're starting with mutual funds. If you guys are getting any value out of this, I need you to do me a favor. I need you to hit that share button right now, ladies and gentlemen, and then comment I shared so that I know who to give a huge thank you to for sharing. So starting out, we got mutual fund terms: closed-end fund. Closed-end fund, a type of fund which issues a finite number of shares that trade throughout the day on the stock exchange at market-determined prices. Investors in a closed-end fund can buy or sell shares through a broker online. So what does this really mean? Using this kind of fund is no different than buying and selling stock shares on any publicly traded company. Closed-end simply means that there is a certain amount of shares in a particular fund. And once they're all bought up, the only way that you can get more is if you buy them from somebody else who's also in that same fund, right? Glenda, I appreciate you sharing. Thank you so much, guys. Hit that share button. People need this information. And one of the reasons that we struggle in the area of finances is because we tend to hoard information. Right now, I get it. There's a lot of misinformation out there, but sometimes you just got to put the information out there and let people sift through it for themselves. Number 2 term, we're talking mutual fund terms. This is a big one that you got to understand: diversification, right? We hear it all the time, but do you actually know what diversification actually means? Diversification, investing in broadly across a number of different securities, industries, or asset classes to reduce risk. This is a principal advantage of investing in mutual funds, right? Now watch this. Different securities, different industries, or different asset classes. Ladies and gentlemen, let me tell you this. One of the things about diversification that you hear within the market is not 100% true, right? What diversification truly means to me is you can have a mutual fund. I've got a great mutual fund that I'm in, and it's in the health sciences industry, right? That thing has averaged 16% for the last 40 years, right? And if you go to myperfectmoneyplan.com, I'll explain to you where to go and how to look for it and all that kind of stuff. But 16% for the last 40 years. So that means my money is doubling every 4 to 5 years, right? But even though the fund itself has a lot of different companies, and on one side, that's diversification because you're not putting all of your eggs in one company, you're investing in a lot of different companies, right? But that's not true diversification because guess what? All of my money is still in the stock market. Even if I had money in different industries, because I could have one of the other funds that I have has been averaging 13% for the last 40 years is communications. So even though those are 2 different industries, all of my money is still in the stock market. To have true diversification is you diversify across asset classes. So while I have some of my money in the stock market, most of my money is invested in private equity businesses, which is my own private equity businesses, right? So understand that. Dollar cost averaging, the practice of investing a fixed amount of money on a regular basis. This strategy results in buying more shares of a mutual fund when the price is lower, or buying fewer shares when the price is higher, which lowers the average price paid for the fund shares. Also, this popular investment strategy promotes regular and consistent investing. Dollar cost averaging, right? It's saying that I believe in this fund so much that every time I get paid, I'm just going to make sure $75 goes to buy shares in this fund. I don't care what the shares cost. Sometimes when I get paid, the shares are going to be up a little bit, so I'm going to get fewer shares. Sometimes the shares are going to be down a little bit, so I'm going to get more. but at the end of the day, I'm investing consistently, and I'm going to get a average cost per share over the long haul, right? Dollar cost averaging, right? Expense ratio, the total of a fund's expenses shown as a percentage of its assets. These expenses include operating expenses, salaries, and more, and amount to most of the cost of owning shares in that fund, right? The total of a fund's expenses shown as a percentage of its assets. So how many assets altogether are in this fund? And then what is the percentage of the asset worth that it cost to manage the fund, including the salary of the fund manager and the team and all of those different things, the platforms that the funds are being distributed and the cost of all of that stuff. You get a percentage cost or an expense ratio. Next, front end load, right? Front end load, a fee that some funds impose at the time of purchase, in addition to the ongoing management expenses, right? So some companies will say, hey, if you want to get into this fund, we have a minimum barrier that you must invest. And on top of that minimum barrier is going to cost you $300. So you might have to start the fund with $3,000 and you pay us $300 in a front end load for us to take your money and start managing. And you pay an ongoing fee for them to manage your money. Front end load. Hedge fund. Hedge fund, a private investment pool for qualified investors. Hedge funds are exempt from SEC regulation, Securities Exchange Commission regulation. Among the various qualifications is a significant amount of wealth. The minimum investment is typically $1 million or more. This is where the big boys play. And if you don't understand the game, then that's on you. Because what does it say? They are exempt from SEC regulation because this is a private thing. And if you and I have an agreement that you're going to let me manage your $1 million, you better know that I know my stuff. Otherwise, you could lose your $1 million, right? And that's why it's only for qualified investors. A qualified investor must have a $1 million net worth outside of its primary residence, or it must be someone who has an income of at least $250,000 per year, right? Hedge funds don't have the same limitations as placed upon mutual funds. The risk and rewards can be both very high for hedge funds, right? Hybrid fund, a mutual fund that invests in both stocks and bonds, right? What is a hybrid fund? It is a mutual fund that invests in both stocks and bonds. Index fund. This is one that you will hear a lot about as well, because this is one of the so-called safe investments. And I only say so-called because every investment, guys, has some form of risk. Your job is to A, understand your risk tolerance, and B, invest based on that understanding, right? Index fund, a fund intended to mimic the performance of a market index. In essence, it's like owning a share of the entire market within that stock index, right? It's like owning a share of the entire market. So whatever that index is, right? It might be the S&P 500. They have an index fund. You can just invest in that fund and you got a piece of the entire market. And what you're doing is you're tracking and the growth of the overall fund itself, the overall market, right? Initial public offering, also known as IPO, right? Initial public offering, a closed-end fund's first offering of shares in that fund. Remember that closed-end funds are similar to stocks in many ways. Initial stock offerings from public companies are also referred to as IPOs. So this is, I have created this company. It was a private company at first. Now I'm going to do what's called taking the company public, or I'm going to allow a company to take this company public, and I'm going to offer shares to the public for the first time, right? That's my initial public offering. Before, the only people that could get shares of this company were private. This was a private thing. I had to invite them. I had to work with them. I had to talk to them personally in order for them to get shares of the company. But now I'm going to allow any and everybody to get into this fund, right? Let me see how many more we got in mutual funds. Oh, we got quite a few. So here's what I'm going to do. I'm going to go ahead and jump into 1 minute motivation really quickly. Guys, 1 minute motivation is where I play a short motivational video. I ask you to share your thoughts. I'm going to share a takeaway, and then we'll get right back to these terms. And I can already tell there's a ton of them, guys. You're going to have to go download the actual report that I'm reading from so that you have this as a resource for you in the future. We're not going to get through all of these, guys. I can already tell. And the shows are already booked up for this week. So we can't do a part 2 or part 3, but you can download using the link in the comments. You can go ahead and download this, but let's get to 1 minute motivation really quickly. And let me have you get your takeaways on today's 1 minute motivation right here on the Cortez Hustle Show.
You're here right now at this moment because tomorrow you want to be somebody greater than the person you are today. You see yourself succeeding, you have a vision, you have a dream. Congratulations. You're already 10 steps ahead of 95% of the world. Imagine if Michael Jordan was scared of missing. He would have never taken a shot. Imagine if Steve Jobs was afraid of people not liking his product. There would be no iPhone. So ask yourself this. Do you want to be a person who fears failure, or do you want to be a person who loves success? Which one? Because you're going to have to pick today. And I'll tell you one thing. One is a failure and one is a success. And if you love success, there is nothing that can stop you. All those negative things people say will mean nothing. They're going to talk about how only 1% make it to the top. Big deal. Want to know something else? Only 1% stick with that fitness program long enough to see results. Only 1% of nerds stick with that video game long enough to get good at it. Only 1% of relationships stick it out to the end. That doesn't mean you have a 1% chance. It just means you can't behave like the 99%. You'll have to do something better than giving up a month from now. Those are just numbers.
Hoo-wee. I don't know about y'all, but that spoke to my spirit, right? Because people love to quote those numbers and those statistics, especially for those of us who are entrepreneurs. Man, 9 out of 10 businesses fail. That means I got a 10% chance to win it, right? I got to not do what those 90% are doing. If I do something different than those 90%, then I got a 100% chance of winning. People love to quote those stats and throw those things around, guys. You can't be afraid to fail. You cannot be afraid to fail. And one of the reasons that fear creeps in is because we care way too much about what other people think of us. Ladies and gentlemen, let me clue you in on something. There's nothing wrong with you caring about what other people think. You just can't care too much, right? The reason we don't take risks is because we're afraid if we don't pull it off, that other people are going to see us as failures. No, man, get out there, take a risk, because it's only through the failing that you grow. It's only through the reaching and the stretching and the trying that you actually get new insights and new perspectives, and your brain literally creates neural pathways through the failure as you go back and look over it and say, oh, I could have done this better. Oh, this is where I made that mistake. Doggone it, I forgot this step in the process. You're literally growing. And understand this, y'all. There's only two states of being. You're either growing or you're dying. And I promise you this, those who are not even trying are dying. Say it again. Those that are not even trying are dying. They're the walking dead, literally. And the funny thing is, some of y'all will let them, the walking dead, talk you out of the land of the living. You'll let them talk you out of trying to pursue your dreams and goals. You'll let them talk you out of doing something new, getting around somebody else, investing that minimal fee to get around major people, investing that minor fee. The walking dead was like, man, you finna spend what to go do what? To listen to somebody do what? Oh, you can go get that information on YouTube. That's what they'll tell you. And you'll listen. Do not be afraid to fail. You're already ahead of 95% of the people. And that's why they'll poke fun at you. That's why they'll challenge you what you're doing, because they know that you're ahead of them. And they're trying to bring you back down to earth. So that is 1 Minute Motivation right here on the Cortez Hustle Show, brought to you by myperfectmoneyplan.com. If you want to learn how to build generational wealth, go check out the Generational Wealth Masterclass. It's about 45 minutes, and you will see exactly where to go, what to look for to get double-digit returns on your money. I'll even show you how to free up cash flow so you have the money to invest once you learn the strategies. myperfectmoneyplan.com. Today, we're talking money terms that you need to know. We're stuck on mutual funds right now. Let's see if I can run through these a little bit quicker and see if we can at least get to the stock terms as well, because I know that's a lot of people are asking about stocks and how to buy and how to invest in stocks and that kind of thing. Where do we leave in? Front end. Let me see. Wait a minute. Where did we? All right. We ended up with IPO. Liquidity. When an investment can be quickly converted to cash, it is said to have a high amount of liquidity. Mutual funds are quite liquid because the shares can be sold back to the fund the next business day. So that's a high amount of liquidity. Money market fund, a mutual fund which invests in short-term securities. Money market funds are very safe. Remember, safe in quotation marks, because all investments have some risk. Since the investments they make are quite low risk, many people use these in lieu of a savings account. Money market funds are also a common place to hold money between investments. It's good for those of us who understand the need of having an emergency fund. If you're holding money for an emergency, it's best to have it in a place that is at least growing and getting some return, versus having it in a traditional savings account where you're not getting anything at all. Mutual fund, an investment company that buys a portfolio of securities and is managed by a professional investment advisor. Mutual funds can be actively managed, where the manager creates a mix of investments to meet the fund's stated objective. They can also be passively managed, in which case the manager would be attempting to track the performance of a particular index. Mutual funds are a great set it and forget it type of investment, because again, the right funds are you can see the history and all of that. So when you go to myperfectmoneyplan.com, you'll see that I show you some of the indicators to look for, that you can right away see that this fund has been performing well for a very long time, right? And that kind of negates some of the risk. Net asset value. The per share value of a mutual fund. This is determined by subtracting the fund's liabilities from its assets and holdings and then dividing by the number of shares outstanding. Net asset value, the per share value of a mutual fund. No load fund. This is a mutual fund that is sold without a sales commission and doesn't have a 12B-1 charge of more than 0.25% per year. See below for a definition of 12B-1 fees, right? So the fees, there are fees associated with these different funds depending on which brokerage house or which fund management company you are participating with, right? Open-end fund, a mutual fund that sells shares directly to investors. The fund also buys back shares when investors decide to sell. The price of the shares is always the net asset value. All right. So there's a lot more in the mutual fund section, but we're going to skip down to the stock section just so that you can we can get a little bit of that. But again, if you go to the link in the comments, workwithcortez.com/FLF, as in financially lit fathers, you can download this document for yourself. But let's go into some of the stock market terms, right? Stock market terms, annual report. All companies are required by the Securities and Exchange Commission to produce an annual report. The report is sent to all shareholders and provides the financial results for the previous fiscal year. Accredited accounting firms review and verify the results. So this is basically the company saying, hey, here's who we are on paper. Here are our numbers. Here is how good we look. Here's how bad we look. Here's how good we performed last year. Here's how bad we performed. Balance sheet. This is a full accounting of a company's assets, liabilities, equity, and net worth at a certain point in time. A balance sheet is included as part of the annual report and effectively tells you what the company is worth. Quick question. How many of you guys have a balance sheet on your personal household? You can have a personal balance sheet. I'll be honest, I got to get one done for myself. I got to get one done for my business. But what this says is you should be tracking your assets, liabilities, equity, which will determine your net worth, right? It's a balance sheet. You can have a personal balance sheet. If you have a company, you should have a business balance sheet. And then you should learn how to read balance sheets of companies that you are investing in. Bear market. We hear a lot about the bull and the bear market. What is a bear market? A bear market is one where there are considerable and long-term declines in the value of the market, typically for 2 or more quarters. There is not a precise or agreed upon definition for this common term, right? So bear market is basically market being down. Some people say if you think about bears go into hibernation. So if you think about hibernation, then the market is pulling back, right? It's bear market. Blue chip, the most stable and prestigious stock on the market. Companies like General Electric, IBM are frequently considered to be blue chip stocks, right? The most stable and prestigious stocks on the market are considered blue chips. These are the companies that have been around for a long time. They're solid. There's no turbulence in their future. No, they're not in the bankruptcy conversation every few years. They're just solid companies, man, and they provide products and services that the world depends on. So you can easily surmise that they're going to be around for another 50 years or so, right? Bull market. The opposite of a bear market is a bull market. 2 quarters of significant stock market growth and a positive outlook are characteristics of a bull market. This is also usually means that there are more buyers than sellers, which drives prices up. So bulls charge, right? So this would be the market charging in a positive direction, right? Next, we got capital gains. Assets that are held for less than 1 year and sold for a profit are subject to ordinary income tax. This is also called a short-term capital gain. An asset that is held for more than 1 year and sold for a profit is considered a long-term capital gain, and tax rate is 20%. So taxes play a huge part in this market, y'all. And if y'all been following this page for a while, y'all know that I'm always telling you that taxes is your #1 expense. You've got to figure out ways to legally, ethically, and morally lower your tax burden, because when you do, that creates what we call phantom money. That phantom money is money that, instead of getting away from you, now stays within your household, right? But it only becomes a positive thing if you're doing something with the phantom money. So for instance, when you start a home-based business, you can create phantom money because your employer takes less taxes out of your check. Now, if you take that phantom money, that $300 to $600 a month that comes back into your household, and you just go and get you a better car, better apartment, then you're not doing anything positive with the money. On the other hand, you take that phantom money and you use it to create more phantom money. What do I mean? Take that $300 a month, pay off your credit card. The minimum on that credit card was $100 a month. Now you paid that $300 a month for 6 months, paid that credit card off. Now you just added another $100 a month to that phantom money. Now you got $400 a month. You take that for the next 12 months and you throw that on your car note. Now your car note is paid off. Your car note was $400 a month. Now it's paid off. You just added another $400 a month of phantom money back to your household. Now you got $800 per month. You can take that $800 a month and you can throw it on your student loans. Boom, they're now gone, right? Dave Ramsey likes to call that the snowball effect. The key is to leverage every dollar that you have and give it an assignment to better your financial position, right? So that was capital gains. Then we got common stock. The basic unit of ownership in a corporation. Holders of common stock have certain rights, including voting on major issues concerning the corporation. When you buy stock, you are usually buying common stock. Dividends, profits paid to shareholders of the company. The board of directors authorizes the payment, usually quarterly. Commonly, dividends are in the form of cash, but may instead be additional shares of stock. Dividends are taxable. You need to know that. Again, anything that has a tax implication, you need to know. Companies with good opportunities for growth will usually elect to spend the money on expansion rather than giving it back to the shareholders in dividends, theoretically resulting in higher prices for the stock, which means greater gains for the shareholders when they sell their stock, right? So you have growth companies and you have dividend paying companies, right? EPS, or earnings per share. This is calculated by dividing a company's net revenue by the number of outstanding shares. This number is commonly used to compare different companies on per share basis, right? Now that's getting into the weeds even for me. But this is why we're doing this, so that you hear these terms, hear these definitions, go download this document, workwithcortez.com/FLF, as in financially lit fathers, and study these terms. And then when you start hearing the financial reports on the news, you'll start to understand more what they're saying. When you start reading different things, when you start hearing different conversations, it'll all start making more sense. And when it starts making more sense, it gives you more confidence. And when you have more confidence, you're ready to take bigger and bolder actions. And if you ain't taking actions with your money to get your money to make more money, you're gonna work until you die, ladies and gentlemen. That's just the end of the story. The Fed, or Federal Reserve Bond. This organization ultimately controls the nation's interest rates. Consequently, the Fed has a tremendous influence on the stock market. The Federal Reserve Bond, right? They control the nation's interest rates. Fundamental analysis. This method for analyzing a stock looks at basic key ratios and attempts to understand the underlying business. This is normally undertaken to determine if additional analysis is worthwhile. So you just look at a few key indicators just off the top, and from those few key indicators, you can pretty much say, I'm not messing with this company at all. Or those few key indicators say, this looks promising. Now let me take a look under the hood. It's kind of like when you go and see a car, right? You're looking at the aesthetics first. If you know just by looking at the car, this is not something you're interested in, you don't take it for a test drive. You don't kick the tires. You don't look under the hood. You don't find out what the price is because you're looking at it like, I don't even want that, right? So this is the same thing. Fundamental analysis says, hey, I'm looking at a few key things. This is not even worth my time to even go investigate any further, right? Growth stocks. These stocks usually don't pay a dividend, but instead choose to put profits back into the company to finance additional growth. Investors buy growth stock for its potential price appreciation as the company grows, right? There's a lot of companies that are in the growth phase, right? So instead of them giving you a dividend, they're just reinvesting. So you might see a company that is very new and they're just growing. Well, they might have a stock that was introduced to the public at $10 a share. But because they're growing, if you think about, I heard that Robinhood, now you got to go check these numbers yourself, but I heard Robinhood, for instance, at one point last week, they were at $35 a share. Well, guess what? When 1 million people bought that share, that stock for $35, or 1 million shares were sold, they made $35 million, right? They took the $35 million and reinvested, and those reinvestments to add new tools to grow the platform and all of those things, then the stock became worth $65, right? So that's what investors who buy growth stocks are hoping for. I don't want a dividend every quarter, but I'll take it. If I just bought 1,000 shares at $35 and now my 1,000 shares are worth $65 each, I was looking for that gain, right? Income statement, financial documents listing the income and expenses of a company, right? Inflation, this occurs when the money supply is too great. It is a rise in price of a specific bucket of consumer goods. The percent increases from the last measurement is called the inflation rate. Interest rates will tend to rise overall, and this will slow market growth. So you got to understand inflation. IPO, we talked about this in the bond market, but it's initial public offering. The initial offering of a company stock, also used in mutual funds terminology, and IPO is a closed-ended fund's first offering of shares in that fund, right? Margin, a method to finance stock purchases. The stock that you already own is used as collateral for a loan. The loan is then used to purchase additional stocks. Margin call, how are we looking on time? All right, we got 10 minutes left. Margin call. If the stock you're using as collateral loses too much value, you must correct the situation by either depositing more money or selling other securities, right? Market capitalization, or market cap for short, a way of measuring the size of a company. A market capitalization is simply the current stock price multiplied by the number of outstanding shares. A stock trading at $75 with 100 million outstanding shares would have a market cap of $7.5 billion, right? So those are some of the investment terms. Let me jump down to real estate real quick and see what they got for you in real estate. Again, this document is extensive. All the most common terms are here. Go to workwithcortez.com/FLF, or just click on the link in the show notes or the description if you're watching us live on Facebook or YouTube. Let's see. I think we got some real estate terms. All right. So real estate terms, acceleration clause. This is a clause in your mortgage that allows the lender to call the remaining principal of the loan due under certain circumstances. The most common reasons for this occurring is if the borrower defaults on the loan. So rent me my money, right? Something happens, they can accelerate the payment of the principal in full. Adjustable rate mortgage, also known as an ARM, a mortgage in which the interest changes periodically. The interest rate is tied to a specific index. Amortization, right? Your mortgage payment is applied to two things, the interest and the principal. As the loan is paid down, the interest portion of the payment decreases and the portion used towards the principal increases, right? And these are all numerical calculations determined by your credit score to ensure that the lender gets the most legally possible, right? I want y'all to understand this. Your lender, based on your credit score, has determined interest rates that will allow them to extract from you the most profit that is legally possible. So your monthly payments is split into interest and principal, and most of your money is going to interest for as long as possible so they can make as much money from you as possible. That's why you see car loans now going from 3 to 5 years to 7 to 10 years. Why? Because the longer they stretch that thing out, the more money they can extract from you in interest. Annual percentage rate, or APR. This is the true cost of your mortgage and takes into account all expenses. The APR includes fees and points as well as the interest rate of your mortgage. Your APR is always higher than your interest rate. Also, it will tell you what your effective interest rate is, allowing easy comparison to other loan options. Assumable mortgage, a mortgage that can be assumed by the buyer when the home is sold. There is usually a qualification process for the new home owner before he or she can assume the mortgage. Balloon mortgage, a balloon mortgage that has a large financial payment due at some point. For example, a loan may be amortized over a 30-year period, but at 10 years, the remaining principal must be paid in full. Closing costs. This will mean different things in different states. In many states, a real estate transaction is not closed until the documents are recorded at the recorder's office. In others, the closing is the meeting at which the documents are signed and funds are exchanged. Closing costs. These are separated into either non-recurring closing costs for prepaid items, non-recurring closing costs, or items that are incurred only once as a result of buying the property or obtaining a loan. Prepaid items are those that occur over time, like homeowners insurance and property tax, etc. Right? Equity, the difference between the fair market value of the property and the amount owed on the mortgage and other liens. To the owner, it is essentially the amount of net worth in the home, right? Fixed rate mortgage, a mortgage in which the interest rate is fixed throughout the life of the loan. Principal, interest, taxes, and insurance. Your mortgage payment may include all of these depending on the terms of the loan. Taxes are frequently placed into an escrow account, and the lender applies the funds towards property taxes. Points. Points are essentially fees that the borrower must pay to receive a home loan. 1 point would equal 1% of the loan amount. By paying more points up front, a lower interest rate can usually be obtained. Ladies and gentlemen, these are just some of the terms that you got to understand in real estate and stocks and mutual funds. We didn't even get to some of the bond terms, but if you click on the link in the description or in the show's bio or the show notes, workwithcortez.com/FLF, as in financially lit fathers. You can go download this document for yourself. Man, I don't know about you guys, but this was super fun for me. I tell you all the time, these shows are for me. I'm learning and growing, and I'm just bringing to you some of the things that I am studying to learn and grow. And we can learn and grow and build generational wealth together. For those of you who are going to come back and holler at your boy tomorrow, we got questions to ask before you commit in a relationship with my girl, Michelle A. on the St. Louis Hustle Podcast. Wednesday, we'll be doing a show on 8 ways to enhance your brain as an entrepreneur. Thursday, we're going to do a throwback on a show that I call Blackrophobia, why Black people are afraid to ascend to new heights. And then Friday, we got a 3-part series where I'm going to give you Black Biz survival tips, since this is Black Business Month. Appreciate you guys all. Please hit the share button if you have not already done so, and then come back and let me know that you did share so I can thank you personally, because I love that we are all in this community together, sharing knowledge and information, trying to help others get to the place that they want to get to financially while we are on our journey at the same time. Don't forget to check out our sponsors, Bianca Shante. I am BiancaShante.com. Get your copy of her best-selling book, All Things Positive. And if you guys want to know where to look and what to look for to get double-digit returns on your money, you need to go to myperfectmoneyplan.com to get all of those details met. Finally, if you want a business in the financial education space, you want me to coach you in building a brand where you can make a strong 4 to 5 figure monthly residual income in the next 6 to 12 months, we need to connect. Text your name to 314-874-6887. Again, text your name to 314-874-6887. I'll send you the information on our program and what it costs to get started and all that good stuff. And we can work together, man. I'll help you build a brand in the financial education space. So with that, ladies and gentlemen, it's a wrap. Till I talk to you guys next time, I want you to get your money up, because you absolutely can do it. But more importantly, you deserve to do it, each and every single one of you. Now hustle up. But you've got to overcome fear if you're going to win.
You're tuned into the Cortez Hustle Show. Please like and subscribe.